Good evening, everybody. It is November 18th, 2012. This is Jeffrey Scott, and welcome to tonight's webinar. As I do on a weekly basis, I do this on Sunday evening. This is the work that I do anyways. I will do this live once a month, perhaps next week. If I do, I'll post the information on the webinars. The others I do tape and then place on YouTube and various other locations where you download these or look at them from. I appreciate the positive feedback I had this week. I saw a number of people that participate on the webinars when I was at the Traders Expo and the Magenta boot camp when I was in Las Vegas. Sorry about that. So let's go ahead and let's start. What a crazy week it was. I think everybody knows what I mean. Friday certainly salvaged much of the week from my perspective on my portfolio, and I think gives us some interesting setups as we go into the week to come. A shortened week before the holiday, and one that typically the rallies start later in the week than the beginning of the week, but I'm one that would like to believe that the rally actually started on Friday rather. So there's my contact information. Everybody needs to reach out to me. This is educational purposes only. Any recommendations are in the sphere of education and are not investment advice. I'm a physician, not a broker, so keep that in mind when you listen to me. And I do this for fun. I do this for free. I'm not compensated. I've paid for all the tools that I demonstrate. And this is, as I said, the analysis that I do anyways at night. If you see my desktop, you'll see a zillion icons. What I really need is a real-time trading platform, and I typically use TradeStation or Thinkorswim. I'll probably migrate more and more over the years, I would believe, to Thinkorswim because it's free, flexible, and good data in my experience. But historically, I have used a lot of TradeStation. I've got a lot of proprietary things programmed into TradeStation, so it's hard for me to give it up. I use High Growth Stock Investor as my source for analysis. I like seasonal analysis, so I may refer to Magenta as we talk throughout the night, and I'll mention Ian Woodward and Brown several times. They're my go-to gurus. Speaking of gurus, I mean, we all got to form our own investing style. I have mine, you have yours, and I'm sure it works for you just like mine works for me. I don't expect anybody to necessarily do the things that I do, but just to give you a basis of where I get my influences from, Ian Woodward and Ron Brown are the spirit of high growth stock investing, and I have seminars twice a year, newsletters, blogs, etc. Alexander Elder, really about the psychology of trading, his own unique indicators such as the Force Index. Van Tharp, several books about position sizing and risk management. Ronald Grunke, if you're retirement age and you're concerned about income, it doesn't have to be about high growth. It can be about getting a 10% return every 3 to 4 months on your wealth. And he talks a lot about calls and naked puts. Bigelow is the person whom I watch the most from a candlestick perspective. Pascal Willane and also others such as Never Lost Trading are my resources for trying to understand what the big money is doing, which I think is a key driver of what to expect in the market. Trade Like an O'Neill Disciple is from Gil Morales and Chris Katcher. I had the opportunity of going out to dinner with them at the Traders Expo. Very intelligent, interesting folks. Used to work for William O'Neill, and they have audited statements demonstrating that they did over 18,000 over a number of years. Fascinating story with their pocket pivots. Then the godfather himself, William O'Neill, as you can see, How to Make Money in Stocks, which to me is sort of the Bible that I read on a very regular basis. I'll talk about stocks I'm interested in buying. Do not take that as meaning I will buy it on Monday. I may own some of them already. These are stocks that I will be looking at on Monday. I don't know if the market's going to open up or down. I might have some thoughts at this hour of the evening. The bottom line is I have to have a list that I fish from. And then, as it says in the bottom, I use some of my real-time tools, both in TradeStation and Thinkorswim, to figure out which stocks to buy and when to buy them, when to sell them. And as you can also see, MarketGauge.com is a resource that I've had a lot of success with in the past, and used some of their indicators. Never lost trading with Thinkorswim has been a neat resource for me as well. So as usual, I'll go top-down investing. I'll look at the market, ETFs, rotations, some stocks, show you some shortcuts I use, and as time allows, I will look at some of the other programs that I might want to integrate things with. This is Ian on the left, Ron Brown on the right. These are the secret weapons of high growth stock investing. We have a meeting twice a year. The last one was in October. The next one will be in March. Highly recommend it. And lastly, before I jump into the market, here is the website, highgrowthstock.com. Free trials are available if you like what I'm doing. There are a number of webinars there as well. Ron Brown, where I'll talk more about the market. Ron will spend more time talking about the program and building the case of why, and I agree it's the best investing platform out there. For what it does, it doesn't connect to any trading, and it's an aftermarket, not real-time resource, but from a charting, scanning perspective, nothing tops it. And then there's, as I said, free software trials. So let's now go into the market and try and get an understanding of what we might see with the market this week. So hide my icon so you don't get distracted. First thing I like to do is this hour, since it's the futures may be trading, is get an idea if the futures are pointing up or down. It's obviously extremely early, but the futures are trading up at this hour. My gut feeling is that this may continue, but it's a gut feeling, and that's all that it is. All I can say is right now, futures are up, oil's up, and gold is up. And by the time we get to the morning, it'll probably change back and forth 5 separate times. As people have been on this before know, I like to spend a lot of time understanding what the market is doing. And obviously, for any of you that follow the market regularly, you know that this is a very strange time that we're in, and that the market is very news-driven, that we've got a fiscal cliff being balanced out perhaps by perhaps a slowly improving economy, and then we have to worry about things such as Europe, what's going to happen here with sequestration, which are pre-planned cuts, rising taxes. So there's certainly a lot of things to be concerned about in this market, yet up until this past week, and maybe the last couple of weeks where we had a nice little correction, the market has been pointed north and up. So I like to look at the week that was and where we're going. So one of the things that I like to do is, well, I'll actually do it live. I do some kind of group inclusion filter. So I go to my lists within HGSI from last week. So I've got those in the archive weekly groups. And let's just do an abbreviated one because I didn't get prepared for this. And so I'm going to do a thing called a group performance analysis. I'm going to choose my groups. I'm going to clear off everything here. I'm going to go down to, whoops, sorry about that. One of the nice things about HGSI is the ability to store things for posterity's sake. Look at the stocks that had a pocket pivot, the best of Woodward and Brown, Big O. These are 2 filters I like to use as our breakouts. Delta ERG, fastest growing, HGS 100, EM point score, IBD 50. This is the weekend review, Big Cap 20, CanSlim Select. Go to Market Smith 250. I'll look at my squeeze filter, high, bolting RS lines, sprinters. I don't think there was a Tim Higgett stock last week, but we'll take a look. Top earnings, top relative strength. What I'm going to do here is try and see how stocks did last week to get an idea of where the strength was in the market. So I'm going to hit OK. I'm going to look if we bought the stocks. Let's see, today is the 18th, so we would have bought them at the opening on the 12th and sold them at the close on the 16th. Let's take a look at what the market did. So this is a GPA week of 11.11 to 11.18.2012. Put this on my desktop. It is, and let's save it. And now it's going to calculate if you had bought all the stocks in those indexes indices at an equal dollar weight of $5,000 per stock, what would the performance have been over the past week? So we're going to look at a couple of things. I know my performance was not really great this past week, so I dumped a lot of stocks earlier in the week, although I did start buying stocks again on Friday. So first thing you notice is the only one that's not red is the Tim Higgett filter. That's because there was nothing there. I like to find the S&P 500 to give me an idea of how my type of stocks compare. So the S&P 500 was down 1.45%. That's a pretty rough week. The IBD 50 was down 2.27. HGS 100 down 2.64. The VectorVest top 100 was down over 3%. My sprinters, which is usually one of my favorite groups, was down 3.24, only one up of the 17. Ian Point Score, which is one of my favorites, was down 3.58. And so you can see that top stocks with EPS strength, relative strength, did not do well. And frankly, nothing did well. Pocket pivots are probably as good performing of one of the larger groups as we had, and the larger caps in the IBD Big Cap 20. So I know already that it was a tough market week and that growth stock investors did not fare well. So it'll be interesting to see if that's the start of a new trend and a problem, or if it is just an aberration in 1 week. One of the things I'd like to use EdgeRater for, edgerater.com, great program. It's a great program for doing a lot of back testing. I like to use it to get a feel of the market. One of the things that I often talk about is the percent B and Bollinger Bands. And if you think of the Bollinger Bands as defining like a cup of water, and the top Bollinger Band is at 100% or 1.0, the bottom Bollinger Band is, for this case, is at 0, that you can be below the Bollinger Band with a high likelihood of quickly coming back in. You can be above the Bollinger Band and very extended with a likelihood to come back within the bands. And 90%, 95% of the action of a stock are going to be confined within the Bollinger Band. So the majority of the time they're within the bands. What happens when they get out of the bands? They go back in. So if you count this as below the bands as one potential slice, each 10% here would make up 10 slices for a total of 11, and then add a 12th slice above and beyond. You can take a look at where an indice, where the stocks fall. And we know that in a bull market, the stocks usually rotate, bounce between the upper Bollinger Band and the mid band, and that is a sign of strength, so more than 80% above the mid band. And in a bear market, the other way, where they bounce between the mid band and the lower Bollinger Band. So EdgeRater will take the S&P 1500 for me and slice it many different ways, and it tells me that 81% of the stocks are currently trading below the mid band. That's very bearish. Now it also tells me that 5% are trading below the lower band, and if we look at the bottom 20% and below, we've got 25, 15, we've got about 45%. Nearly half the market is trading at the 0.2, which is about here or below. So that tells you that most of the stocks closed near the lower part of the Bollinger Band. Now, if I look back one day on the 15th, you could see that the number of stocks that were, and again on the 14th, closing below the lower limit of the Bollinger Band were much higher. So even though the numbers are pretty ugly, I think potentially we have hit a low for this swing, and we might start to see a few days of positivity, especially as I look at the number of stocks that are sitting beneath the bottom of the Bollinger Band as actually getting smaller. Now, in a bull market, I'll show what a bull market looks like. In a bull market, if we go back about 10 days, not even 10 days, this would be, 10 days, 11/6, you can see the majority of the stocks were above the mid-band, and now we start to see a number of stocks at the high end of the Bollinger Band or even outside to the above. So EdgeRater is consistent with a weak market, as indicated both by the large number below the mid-band, and the large number shifted to the left. But that said, perhaps some improvement. So what else do I like to do? I like to go into HGSI, open up my warehouse, and let's take a look at, I changed my resolution, so everything I do is going to have to be resized, which is not a problem, just bear with me. So one of the things I like to go to is Woodward and Brown user groups. I like to look at Major Markets Plus, and then set my view to top down. So this is looking at, I'll show you exactly, looking at a combo ranker, which ranks the portfolio that I've listed based on specific parameters. And you can see it's 1 day, it's accumulation distribution, it's 5 day, and it's 2 and 13-day force. So this is all technical factors looking over the last several weeks, heavily weighted to the last couple of days, because the force index is just a combination of a moving average applied to price time, change in price times volume. So this is all technicals, heavily weighted towards recent. It gives me an idea or sense of what the market is doing and where is the strength. So the first thing you look at, you see gasoline and oil are up at the top. And interestingly, they're at the top the same time as the dollar is. So the dollar has not been our friend if you're a long-term equity investor, because strength in the dollar usually equals weakness in the marketplace. The dollar gets strong on days when Europe is showing some entropy and there's a lot of fear. I often look at the dollar-yen. A strong yen it also occurs in the times of entropy across the world. So as you could see in what we talked about last week, exactly what I thought would happen is that the dollar would move up to the 200-day moving average. It would bounce off and potentially retrace. So we got the move up towards the 200. It intraday crossed above the 200 on Friday, but couldn't hold and closed with the doji. So the dollar is clearly in an uptrend. It's had a very big move since the middle of October, but it will probably face some pretty stiff resistance here, as shown on Friday. If the dollar falls, the market likely goes up, and so do commodities. Now, interestingly, despite the fact that the dollar is up, gasoline and oil both appear to be up for the week. And we can look at gasoline, and we see gasoline pull down to the 200-day moving average. It's had a little bit of a move up, perhaps impressive related to the fact that the dollar has gone up. Perhaps it's related to some of the tensions in the Middle East. Perhaps it's related to the refinery issues and access to oil issues in the Northeast after Sandy. If one looks at the USO, you see a similar pattern of not really much of a rally, but I guess if you were to look at it, maybe at 2-3% over the last week and a half in oil costs. Now, just because you'll be seeing these charts over and over, just remind everybody, these are momentum ribbon. Bongos is a indicator that we I had a working group that I participated in that we created. The weekly bongo is a great signal to follow in and out for a conservative ETF investor. The Elder Force Index both has a long and a short, just like the bongo. I'm a pullback investor, and I like to find pullbacks, which would be red in the shorter indicator, while the longer indicator remains green. Accumulation distribution is in the middle. The high jump sort of compares how far we're extended from the past. The higher we're extended, the higher the risk of a pullback. Earnings will be sitting up here. Down on the bottom, I've got more momentum indicators. In blue are two kahunas. The deeper the kahuna in color, the more profound it is. These are measurement move within the Bollinger Bands. Blues are up, reds are down. Green are phoenixes. These are follow-through days using HGSI indicators. Force kahuna, I'm going to probably skip today, but suffice it to say it's a combination of is your kahuna and are your force indexes all lined up in the same direction? If so, when you throw a kahuna, you get a force kahuna, which becomes the HGSI's perhaps shortcut towards finding things such as pocket pivots. And in red and blue, with respect to Gil Morales and Chris Katcher, the pocket pivots that they have brought to investing. Let's go out of this, go back to this thing here. If we look at 5-day returns, oil, bonds, the dollar, and gas were the only things positive over 5 days. The worst offender was the volatility index, and as you can see, just as I think the dollar is likely to do, the VIX traded up to the 200-day this week, got above it, couldn't hold, and came down pretty hard. It's at a place now where it might start to bounce. A falling VIX is positive for the market, or perhaps it indicates a positive market. If we look on Friday, it was a little different story where we had strength in small stocks, strength in utilities, although still negative for the week. Now at this point, I've already demonstrated to myself weakness in the market and that none of the major indices, when I look at my balanced technical ranking, make it near the top. In fact, most of them are near the bottom. I like to look specifically at 2 or 3 of them. So I like to start with the S&P 500. So these are larger stocks, very widely held, mostly names that we would recognize. And when I look at the S&P 500, what do I see? I see an index that from its top to its bottom, let's show you how we do this with HGSI, from the top to the bottom on Friday before it started to recover, in 43 periods it dropped 8.9%. Certainly at a point, as pointed out by Ian Woodward, where one would expect to see either a bounce or potentially a deeper drop. So right on cue, stock opened where my head is, my mouse, pulled back, and closed right near the top of the day, a very bullish sign, after a low close doji the day before. For many people, this is probably a setup for a buy. Looks a lot like a variant, perhaps, of even a Morningstar pattern. That's the S&P 500, so beat up, but with a potential buy signal on Friday. We look at the Dow Jones Industrials. We know this represents a grand total of 30 stocks, but it's so closely followed it's worthwhile looking at it. So here is the Dow. So the Dow looks in many ways similar. Let's do a top to bottom here. So from the top down to the bottom, 28 periods, down 8.7%, so almost equal to the S&P 500. So what do I see on the Dow? I see, again, a similar type of a pattern on Friday, including a pocket pivot, and perhaps, as you could see, more, well, certainly with more volume necessary to make a call of a pocket pivot coming into the market as well. So a pretty impressive day on Friday for the Dow as well. So again, momentum indicators, candlesticks suggesting perhaps we're going to have a short-term bottom. Then again, I like to be optimistic, not depressing. The NASDAQ composite, let's compare its drop to the others. And obviously, I looked at this last week, and it continued to fall. So let's kill that one. Let's put a new trend line in, or a new measurement stick in. And then from top to bottom, it looks like it's fallen 12% in 38 days. And similar to the last indice, showing what looks like it could be a bottoming pattern with a pocket pivot, and one that perhaps suggests that we might have some strength coming in. I'm not totally convinced. My momentum indicators were still all red, and we've got a lot of damage to repair. And as you can see back here, you can get a short rally, which just sets up an even better shorting opportunity. So I see short-term reasons to be optimistic. Long-term, I'm still concerned about this market. I like to look at the S&P 1500 because it's a well-managed index that includes the 600, which are small stocks, the 400, which are mid, and the 500 that we've already looked at. And you could see, again, a similar pattern where it looks like we had perhaps a low close doji, and then it was followed by an up move on Friday, suggesting that maybe we're going to see a little bit of some positive action. And we just take a look at how far we've fallen on the S&P 1500. We've fallen 9% in 43 days. So we've had a true correction. We are going into a seasonally strong part of the year, and one that perhaps will get to recover some of what we might have lost over the last couple of weeks. If I look at Magenta Trader and I look at the Qs, you see that the period from November 26th to December 7th, 70% of the time has been positive, averaging about 2%. The down days are averaging minus 0.59. If I take this to, let's say, 35 days and look at it to the end of the year, we are going through, whatever the next month, you have about a 1% gain over the next 30 days, ranging from plus 2.43 to minus 1.6, suggesting that we're going into a positive time in the stock market. So all the indices look the same, all of them suggesting to me that we're at a nice place to have a bounce. I like to look at TradeStation, and the first thing I want to point out, if you're a TradeStation user and you're not getting this, it's time to go back and find it. You know, one of the things that we certainly saw this period of time is you get earnings are tough times, and you need to know when your stock's earnings are coming out. So TSL is tomorrow, Diana Schiff's, and Cyclone this week, and then I'm done for this earnings rotation. This is a free indicator. It can be found in the TradeStation forum. I will look up earnings, and the guru, G-U-R-U, is the person who writes it. But it's a wonderful thing, an add-on into TradeStation. And unless briefing.com redoes their format again, hopefully we'll get this to continue working for some time. I find it to be a wonderful addition. Take a look at the NASDAQ within TradeStation and get an idea if the NASDAQ is showing us anything that might suggest a change is at hand. So the first thing is the NASDAQ is going to paint, or Elder is going to paint on the price action a red, a blue, or a green. A blue is clearly a indecision of which you could go long or short. Red is you could only sell, and green you can buy, or and both the red and the green you could also hold. So blue means you can do anything, buy, sell, or hold, because there's indecision. Red is a seller hold, and green is a buyer hold. The way that this is done is the paint bars are painted, the red, blue, and green of that time frame. The Elder Impulse Release is painted for the next one down. So what I typically find is that my Elder Release will show me the weekly on the same chart as I get the daily. So that's a really nice feature. And you can see the weekly continues to be weak as well. So on the NASDAQ, you did see a very positive day on Friday, closing near the high. And typically, stocks like to stay within the Bollinger Bands, and it's still fairly profound, not Bollinger Bands, excuse me, the Elder Envelope, profoundly below the envelope. So this shows me that I could start to buy, that maybe I should expect a bounce back in the Elder because of the blue here. Although when one looks at the weekly and the monthly on the NASDAQ, they're still red. So that would temper my enthusiasm that I'm going to see a big response. Although not everybody agrees with my interpretation, and I'm doing more and more reading to make sure that I'm not incorrect. Here is the S&P 500, or the ES weeklies, the E-mini weeklies. And what these are showing is the professional speculators, hedge funds, et cetera, are net long this market. There's very little activity by the non-commercial speculators, us, the little guys. And in red, the professional money has gotten more negative. Now, what I've learned from John Person, is that if you look, for example, the market falling, the individual speculators like us were buying while the professional speculators were short. As the market went up, the professionals went long and we went short. And the fact that the professionals are long here, I find that to be optimistic. As I'm learning from other interpretations, the fact that the commercials have turned negative and are getting close to as low as it gets, at least in this cycle, is a negative sign. So indecision here as well. So don't know what the market's going to do. I do believe we're due for a couple-day pop-up, and I certainly hope that's what we get in the futures at this point, although softened a little bit over the last hour or so, are positive. So once I've gotten my impression of what the market's going to do, I want to figure out what sectors are likely to be leaders. So on the top down, it's not going to do it for me because I need to know what's working right now. Sector rotation does not occur on a weekly basis, on a monthly basis or a 2-month basis. I want to look at rotation over the last 2 or 3 days. So I switched to the force and look at the impact of the force index on group rotation over the last 2 days. You can see we start with 145 groups. When I go to the 2-day force, I find that 66, so this is almost doubled from Monday, of the groups have turned positive, and you can see which groups have the strength. If I go to the force index down, you can see that only 31 of the groups, that means a lot of them are neutral, but 31 of the groups are showing a negative force. So let's look at where the strength is and see if we can't find any interesting stocks to buy. I just did something I didn't mean to do, but it's no harm, no foul. Here we go. So let's go back to, all right. So casinos and gaming, probably an aberration. The aberration is that Penn National Gaming announced that they were going to restructure themselves as a real estate investment trust or a REIT. If they can pull off converting to a REIT, the down news is it requires them to pay out the majority of their earnings as dividends. The good news is it's a very tax-favored, not double taxation. So even with the changes perhaps in the tax structure, a dividend will be a corporate tax followed by a personal tax once that dividend is paid out. So this is it was a very bullish move. You can see the stock went up 20, 25%. It was purely on that news. It was nice enough to carry Las Vegas Sands and others popping up. So these are stocks that have pulled back pretty hard. Here's Ameristar Casinos, had a very big day. But I think all this motion was not an improvement in the fundamentals, but rather the belief, that others can follow and become REITs as well. Take a look at on a weekly, and you can see Las Vegas Sands, as have the majority of these, have sold off pretty hard from their April 2012 highs. So I'd say casino gaming is interesting, but it's probably more related to an aberration of that single REIT. Home building. I have to tell you, this was probably my star sector as I looked through stocks this evening and today. And so it looks like the pullback in home builders might have ended on Friday. It's easy to see the excitement in this group. And in fact, you could see the EPS change going forward. The growth rate is just impressive, and the revenue is also quite impressive. So this looks like they're going to continue to lead, although they had a rough couple of days. We'll take a look at a couple. Here's Lennar. Lower lefts to upper rights will be seen with almost all of these, and then a pretty deep pullback. So let's look at this a little bit more detail. from its peak to its decline on Thursday with a low close doji. 6 periods dropped 13%, but a very nice move on Friday off of that doji, traded up, slowed down at the 50. There might be some consolidation here, but with a kahuna, it looks like we're about to see, I believe, the upswing in the home builders resume. Toll Brothers, another similar pattern, a relatively deep pullback off of the previous highs, down to almost the 200-day moving average, dropping 20%. Doji, big tall white bar, three Morningstar appearing on Friday, suggesting that another leg up is here. There will be resistance, certainly at that 50-day moving average. Pulte Group, more of the same. You can see pull back, Doji, long-legged Doji. KB Homes, a similar pattern. They don't make money as of yet, or currently, but despite that, the stock has performed almost lockstep with the others that I've demonstrated to you. You can see we'll turn positive on earnings intermittently over the next couple of quarters. So no question that there's strength in home building, and one of the places I'd be looking to put my money. Big Pharma had a strong end of the week. I know VRX will. Let's take a look at BMS rather, and Pfizer, and we'll see if there's any ponies in here. What I believe has really helped these stocks over the last couple of months is not their earnings growth, although you can see here they've had almost very little earnings growth and they've had some contraction. You can see a big revenue contraction as well as some of their blockbusters went off patent. But the strength in these stocks is almost certainly done to the 4.3% dividend that's offered. Another one down the list would be Pfizer. One looks at the stock, one sees again a pretty deep follow-up, but like the builders, both of these had very bullish-looking Fridays, and Pfizer as well pays a nice beefy dividend of 3.7%. Look at one more, Valiant, VRX, similar story. Doji looking hammer on Thursday, kahuna on Friday, big updates, got to get through some overhead supply around the 50, but certainly looks like this stock might be getting ready to move. Biotech has been strong for quite some time. Gilead Sciences had a big move on Friday. Doesn't have as impressive earnings this quarter, but seems to have some acceleration of earnings coming. If you look at the math, they make about $1.80 a year, and if they can get their growth rate up to 40, 50%, they clearly would be trading at a discount. They had some very positive data for hepatitis C. Regeneron makes a number of products. They compete with a number of Genentech drugs such as Avastin in colon, Avastin in macular, in a vascular retinopathy, and you could see they had a pretty robust pullback, including a negative pocket pivot. They had some upgrades on Friday, and you can see a very bullish-looking candle here, big volume, and a large kahuna. Biogen IDEC, now I call this one a pullback ready to run. I don't necessarily love it for its earnings per share growth, but this is a stock that pulled back to the 200-day moving average, bounced around for a couple of days, had a pocket pivot Friday when there was also a squeeze in play, breaking above the 17 and the 8-day exponential moving averages, not crossing much below the 200, and looks to me like it's about to take another leg up. Alexion, over the last 3 years, as I'll show you by a weekly chart, has been one of the true leaders in the market we've been in, had a fairly deep pullback, and as you could see, it's in a phase of wanting to heal, Looks like it may have put in perhaps a double bottom here and getting ready to run. Not a cheap stock even with the pullback, but a very innovative, interesting product with very little near or long-term generic competition to be concerned about. Netivation, I talked about this last week. One of my favorites. It didn't have a great week. Had you been fortunate enough to have bought it on the open after I said to buy it on Sunday, Monday, you would have pretty much had a flat week. But I do think very highly of this stock. It's bouncing around its 200-day moving average. Doesn't look like much in earnings. It just had a blockbuster approval in prostate cancer. I think they have a de novo earnings per share story, that they'll make more money going forward, as well as a potential acquisition candidate. Arena Pharmaceuticals. I'm intrigued by this one. It's a small biotech, recently got approved a obesity medication. The obesity medication is being marketed by HGSI. There were a couple, I think two. Vivus is the other with a recent approved obesity drug. Historically, there's been a lot of challenges to these drugs with unexpected toxicity. And if it's just a drug to lose weight, you're not going to take much toxicity, except in the very morbidly obese. And I think there's been some less enthusiasm for both Arena and Vivus because of the slow uptake of their products. Onyx is one that I think is very undervalued here. Seems like it's expensive at $72, but it's got a $4.8 billion market cap. It has recently had a drug called Kyprolis approved for myeloma, regorafenib for colon cancer. It still has a $1 billion product in Nexavar. This is, and apparently they had a lockup on a poison pill that recently expired. I expect this to be a takeover candidate. Although if they don't sell it and their products perform, they might grow their valuation by themselves. I think this is a high likelihood takeover candidate. Don't really know anything for sure, and have no information that others don't have. A couple of others, since people know I have some experience in biotech. Pharmacyclics has the next greatest chronic leukemia drug. It sold off when it didn't seem to be effective in another type of cancer called multiple myeloma, but it has blockbuster opportunities in CLL. I think very high of it. Market cap $3.6 billion. This could be a $1 billion drug opportunity. Medivation, Pharmacyclics, and I'll show you Ariad in a second, are drugs that I have on a list. And when a market has a particularly lousy day, I look at these things to load up on them. I don't see Ariad sitting here, so let me just look for it. Here it is. Ariad, like Pharmacyclics, has a new drug ready to come to market soon. And you could see, like so many other companies, had a pretty profound pullback from this peak down to here of about 24%. And I think it gives us a nice opportunity if the market trades up. Biotech appears to be a leader right now. So enough biotech. What else we got here? Internet retail, changed index. Don't really know this group very well. Facebook had some lockup expire, and the market actually went up because it didn't seem like there was much dumping by the insiders. The problem with Force, and remember these are being ranked by Force, is because of what goes into Force. So Force's volume today times close today minus close yesterday plotted. And then we look at a 2-day and a 13-day exponential moving average of this. Things that have huge volume will skew the Force numbers because it is such a big thing. So we see diversified banks all the time, and I think Facebook has huge volume as well. In fact, the volume was $107 million on Friday, so enough said there. Out of curiosity, what was the volume on Thursday was 78 million. If we go back here, it was 228 million, I think, on the last around the last lockup expiration. Oil and gas storage, I noticed this when I went through charts today, that a lot of the MLP partnerships have started to turn around. Now, I may point out some specific ones later. The ones that look most interesting to me, because I've been in and out of Atlas, was one that I liked. I liked it because it has pulled back. Now, it undercut its 200-day moving average. I don't like that. I'd rather seen it stop there. But it very quickly in one day got back above the 200-day moving average, had a pocket pivot. Volume coming in on Friday still is negative there. Huge earnings per share growth, and it pays a 3.3% dividend. Other ones that I looked at this weekend that I looked at a lot that looked impressive to me. Let's see if I can find one. I can't remember the other one I found. We'll take a look at one of these later. That'll be on my buy list, and we'll see. I think I found one with a 7.8% dividend as well. Asset management banks were up. Don't know anything about this group. I'm not going to spend much time here because I can't really say much about it except to say they made it to the top groups. And you could see sort of a hanging man, hammerish, after a deep pullback with a big gap up on Ares Capital. American Capital Realty Trust, a nice up there with a pocket pivot. I don't know this sector, so I'm not going to say much about it. Home loan servicing, also a very big day. Back. If we look at the force down, up at the top are computer hardware, communications, internet software, semiconductors, suggesting that technology remains extremely weak. Steel, which was up on the other list earlier in the week, sorry about that, I did that the wrong way, I got to highlight it first, made it to the negative list, and let's take a look at some of these. Here's Vail, an iron ore company, certainly, I don't call it falling knife, but pocket pivot down. All my momentum indicators are red. I wouldn't touch that one. I actually did buy some U.S. Steel calls that were a couple months out because they got cheap at the end of the week. You know, a big doji on Friday. I'm looking for U.S. Steel to trade up to this 200-day moving average during the time of my call, and my call is designed to make me money if that happens. Remains to be seen, certainly very weak compared to the things we looked at on the upside. All right, so majority of groups are positive, and we identified some of where the strength was in biotech, pharma, home building, to the oil, gas, and storage. So what I like to do now is to start to look at the market itself and see if I can't find anything that looks attractive. So I could start and put up scorecard no index, take off my filter, and look at all securities. And I could see that there's 7,810 in the marketplace for us to look at. And the highest ranked stock is Regeneron, which we already saw. We're going to look at Prestige Brand Holdings. I like that one a lot. We'll look at most of those ones that are sitting there on top. Now, I don't buy all stocks. In fact, I have a requirement. So I'm going to show my requirement. I require my stocks that I'm willing to buy to have a price over $5, volume over 150,000, and not be an index. So I'm not even sure that that's even my real numbers. I'd like to push it higher. But those 7,800 stocks become 2,600 stocks when I lower the number to include that filter on price and volume. Now, there are a number of things that I do to try and figure out what the best stocks are to buy. One of the tests is a group inclusion filter, where I might go into a list of indexes or of lists, and I can pick which list I want to look at. And the hypotheses are that if a stock makes it to a number of lists, that it must be an attractive stock and that I should buy that stock. and that the more list the stock makes, the more bullish it is. So we do this on a weekend. I do this sometimes during the week. And when I did it today, here's the kind of stocks that I found. And we'll look at CBR Energy, MasterCard, Prestige Brand Holdings again, Regeneron. Here's a refiner, tire company, technology company, a retail company, technology company, I guess kind of technology, retail, high-end retail. So this is a list where it looked at all the stocks that make it into those smart groups, and those that made it to the majority of them make it to our list. You could see which were the most popular stocks on this test. And we're going to look at these later because I saved the top 15 to a watch list. I can't resist. Let's see if there's any further movement in that market. Looks about the same. Now it's close to 8 o'clock. Not a whole lot going on. All right. Another thing I can do is I can look at smart groups. And I'm going to actually do a group inclusion filter in a second to demonstrate. The smart groups are some pre-formatted lists that come with the program updated normally. They include a list of all the pocket pivots that occurred in the market on a given day. Pocket pivots can be a very bullish sign of momentum. So you might want to buy stocks that are having pocket pivots that are otherwise showing good technical patterns. There are also a number of Ian and Ron searches in here that you might also find to be useful. So let's do show you how to do a group inclusion filter. Let's see if there are any stocks that seem to make it to a lot of these lists. So let's go to Tools, Designer, Tools, Group Inclusion Report, Clear, and let's take Pocket Pivots, and then let's pick some of my favorite from Ian and Ron. Best Criteria, ERG 240, Strong EPS, Growth Stocks, HGS 100 Leaders, and then my favorite two here, Strong EPS, Relative Strength, and Poorly EPS Acceleration. Make group from list. Look for the top 15 in the inclusion filters. Let's hit OK. Top 15 from smart groups. Hit Save. And very quickly, it's going to show me what groups it found. Virgin Media, here's that CBR again. Here's Prestige again. Regeneron. Eagle looks good. It's a cement company. Aspen Technology. So similar stocks that I can find with other means. I can do special views. So let's go to a view of all stocks, all securities. And then I'm going to show you one of my favorites, which is called the sprinters. And let me talk about a view and how I use a view. A view is a combination of a filter, which identifies which stocks to screen, and then it looks at a combo rank, and it uses, I believe, a one-step with bingo combo rank. And let's see what's in that combo rank. A white body, so it's an up move. Volume versus previous volume, that's technical. Revenue, it's fundamental. It's got earnings per share, group strength, force, accumulation distribution, one-year EPS growth. So this is a very balanced technical and fundamental ranker. So it ranks what are the best stocks. So a couple things come out. There are only 8 that make the filter today, or the view. Typically, I see 50 to 100. So it might mean the market's still horrible, or it might be signs of a bottom. Let's just take these real quickly, because you'll see these come up again and again and again. As you notice, the first 2 are refiners. This is Holly Frontier, or will be, certainly making a nice move. These refiners seem to have very up and down earnings stories. And I don't know if it's because the the price of gas. I'm not sure if it's related to the storm. It's certainly related to things such as how many refiners are down for repair, switching from gasoline, summer mix to winter mix, heating oil, all those types of things seem to matter. Bottom line here, certainly a nice up move while the market has been down. Everything is green. CVR Energy is another refiner. I think this one also does some ethanol as well. Pull back to support at the 50-day moving average and started moving again. Awesome earnings per share growth. No, not hard for me to see and understand why it makes it to the list of top stocks wherever we've looked. Aon, don't know this company from Adam. I think it's a consulting company if I remember correctly, but it's probably not. So it's consulting about brokers and human resources. Everything is green, pocket pivots at the end of the week. Not huge earnings per share growth. In fact, it looks like it's slowing down. It trades at a multiple, however, of 14 and is growing substantially above what its multiple. So it's a cheap lower left, upper right, a little bit loose, clearly a leader. Federal agricultural mortgage, things that have federal and mortgage in it, I'm not interested, but a number of pocket pivots, looks like it's taking off to run. Cooper Tire, I think one of the benefits of low natural gas might be to chemical companies and perhaps rubber, although I think rubber is equally tied to oil. Great earnings per share growth. I've seen these things fall as fast as they go up, and you can see Cooper Tires had a very nice run, perhaps a topping looking thing, but had a bullish engulfing pattern. Maybe they got volume and run again. Certainly have great earnings per share. When you look at the PE, the small dividend, and the growth rates, you can see why people might be excited about Cooper Tire and rubber. Don't know anything about this, so I'm going to skip it. Home Federal Bancorp of Louisiana, kind of flatline there. I'm not sure if it's a takeover. HF Financial, again, another stock I don't know too much about. Everything has turned green, a mortgage thrift. Did basing for a while. Good earnings this quarter, not so nice the next. Don't really like this stock. And that was it on my sprinters. Another of my favorites is Robert Top Stocks or Top Bongo Stocks. In this combo rank, the filter looks at best fundies, and it looks at a similar ranking module as we just saw. And some of the best fundie stocks, again, the same old, same old. Regeneron Pharmaceuticals, we'll look at it one more time. The stocks had a terrific run, fairly robust pullback with a bullish engulfing pattern on, or excuse me, a large white candle on Friday. Looks like it's getting ready to run again with a force, CUNA force at a lot of volume, huge earnings per share growth rate. Prestige bands, one of my favorite patterns. Here's a stock, big move up, sort of a flag, pennant pullback to support at the 17. The pocket pivot came in. It's going to run again. I'm not sure one day can make a flagpole, but it certainly has a pattern that I expect to make back maybe 4 points from this buy zone. CVR Energy, again, certainly a big performing refiner. Here's another pattern that I like. This is a Tiddler, a small biopharma company, probably doesn't pay a dividend, most certainly. Trades at about $9, has gone sideways for the last 3. If they have a product, if people believe that they're a good company, this is a natural time to see them take off as they pull back to the 50. You have the squeeze with the 17, the 8, and the 50-day moving average coming together. Repligen, it must be another drug company, a biotech company, probably going to bounce between the 50 and the 200. Looks a lot less exciting to me. Ellie Mae, I saw a lot of stocks that looked like this today. Not much earnings per share growth. In the setting of a pullback, gets a kahuna and a bullish engulfing pattern. Might be worthwhile watching from afar. I'm not sure I'm ready to jump into Ellie Mae. Plus, I think of the Clampets. All right. So what I've done as part of my, excuse my French, anal retentive obsessive compulsive behavior is I looked at about 500 charts to get ready for today. So what I thought I would do is close with 15 minutes of looking at what I thought were some of the best stocks. So what will be done so far, just to recap. We started by looking at the markets and talking about some of the external forces that may determine what the market does in the short and near term. We talked that seasonably, one often sees rallies beginning at the end of this week. December is often a good week in the market. We've got some concerns about the fiscal cliff in Europe, what's going on with Israel and Gaza Strip this weekend, and we also get some positive news about potential movement in Congress on agreement on something to do with the fiscal cliff. So I think we'll remain news-bound and news-driven, and that if there is any type of positive movement over the next couple of days on the fiscal cliff, we are deeply oversold, and a substantial rally from here would not, to me, be much of a surprise. We looked at the different indices, saw weakness across the equity markets, although we saw the last day, Friday, showing evidence of some improvement. When we looked at a short-term ranking of the sectors and industries, we saw pharma, biotech, home builders, MLPs sitting up at the top. We continue to see technology as some of the weaker stocks. We looked at a number of different ways to identify the top group of stocks, and the same stocks came back over and over again. We're going to probably see some of them in the next few minutes. So one of the things that I do is I incorporate a list over the weekend from my scanning and my chart pulls. And I break this list into a number of topics. I can't always spell, as you can see here. I look at leaders that are extended or gone. To be in this category, you pretty much have to be at some of your recent highs and no recent base, no recent pullback. A breakout EPS all-star could look a lot like the first group with great earnings, or it's most likely a stock that has pulled back and is now broken above its prior high with great earnings. A pullback ready to run, I'll look at several of those. You can see that was my most common popular pattern this weekend. These are stocks that I love. They pull back typically to a major moving average and then bounce off with a pocket pivot, perhaps with a bullish candlestick, perhaps with a kahuna. Pullbacks waiting for signal might be the same as the above, but haven't gotten that last signal. And every once in a while I find something that I find intriguing and I start fishing from the bottom. The last two categories are not high growth stock investing, but they might be some place to put some speculative money and try and make a quick hit. So in the next 15 minutes, so I'm going to give this, I'm going to look through as many of these as I possibly can, and then I will say good night. So let's open a warehouse module. Let's go into my buy stocks. So these are stocks that I picked this weekend. Let's go into the scorecard no index. And there you got 47 stocks. Let's see how many I can get through. It's 822. I stopped at 837. Regeneron, we've seen before. This is a biotech company. It makes almost every list I looked at. If you look at it on a weekly, you see a very nice incline. Pretty nice pullback to what would have been a nice place to bounce on the 17-weekly moving average. We got a kahuna on the weeklies. We got a kahuna on the dailies. We have big volume coming in, not quite a bullish engulfing pattern. We got about the 50-day moving average. This is a pullback, ready to run with great earnings per share growth. Hard to buy a lot of the stock here. You could buy vertical options to capture some of the movement without having to spend $150 a share, although if you're Ghilardi and can afford a couple thousand shares, go for it. Just kidding, he's got too many kids to even be buying these stocks. Here's that pattern that I really like, that pullback ready to run with a signal. Here is Prestige Brand Holdings. So if I look at a weekly, get an idea what the stock has come from. I see a stock that's been a little loose, but clearly in an uptrend. That pulled back to the 17-day moving average and took off on Friday with volume and a pocket pivot. And most of my momentum indicators turning green. That's one that I might be interested in buying tomorrow. I would set my stop probably in the maybe just below that 17-day moving average and hope to get into it right above the close of the day on Friday. USANA Health Sciences, weren't a whole lot of managed care that made my list. I thought this was actually a managed care company, so I might be wrong. Nutritional, personal care, and weight management products. All right, so it's not a managed care company. It's been in an uptrend. I like to prove that on a weekly chart. I also like to see it above the 200-day moving average, pull back. Let's go back to the daily. You see that had a long-legged doji on the weekly. Trace down to the 200-day moving average, slow move up. You know, is it that exciting? No, the group is up, but it looks like it's a stock that might make a run if this market is turning. I'd put this on my lower exciting ones, though. Santeris, we already talked about it. It's gone sideways to the 50-day moving average. I would call that, it could be a pullback waiting for a signal. It may just dip below the 50 and drop all the way down to 200, or you might see a kahuna and a pocket pivot come in tomorrow, and I might be all over it like a fly in sandpaper with some earnings coming into the stock. CVR Energy, we've heard about this several times, pulled back nicely to the 50, running again. Elizabeth Arden, one of the higher-end retailers, perhaps has given us a double bottom. It had a a gap up on Friday, closing right on the 50. Something I might keep my eyes on, especially with some of the earnings per share growth allegedly coming into the stock. Pharmacyclics, this is one I talked about before. I look for times to buy this company when there's weakness in the market. It has had a pretty deep pullback, crossed above the 8-day exponential on Friday. I might want to wait and see something else. I might want to see some volume, a kahuna, a pocket pivot, but it's on my watch list of things I want to get into. Trex, this is a company that makes some stuff that would go with the housing boom. They make in my house, they made the porch, the artificial wood that made the porch on our deck. And you could see it's had a pullback to the 17-day moving average, had a big positive day on Friday. Most of my momentum indicators turned green. Has earnings per share. This is one I'd like to see go up, and I would expect to go up if the home builder strength continues. This is a little tiddler biotech, NPS, doesn't make money. I wouldn't buy it. It doesn't meet my criteria from a fundamental perspective, but it's pulled back to the 50 where it seems to be holding. Kahuna's volume and a pocket pivot coming in Friday. I'll probably regret saying I wouldn't buy it because this puppy looks like it's going to run. Why is it that I like this pattern? Because, that's all I have to tell you. No, because let's say I buy this stock. I'm going to get into the stock probably, let's look at it on Friday. The high of the day was 944, closed at 932. Probably get into the stock probably at 944. I'm going to put my stop either at 890, which is a 6% risk, or less. And frankly, I could set it at the 50-day moving average because my hypothesis is that it's going to bounce off the 50 and take another leg up. I don't like the fundamentals, but it's probably mostly because I don't know what this company does. It might be just like Pharmacyclics and Ariad and Medivation and maybe a great buy. But I like it because a stock that's pulled back to major market average and has not become extended yet has very clear-cut buy and sell signals from buy and sell points, which I think are low risk. Holly Frontier, we already looked at it as a refiner, seems to be taken off again. Don't need to say much more about that. Cooper Tire and Rubber is a tire company, as we talked about. It's had a very nice move up. Jazz Pharmaceuticals is a probably not the prettiest chart. I'll be the first to admit it. Sorry about that. My wife decided to play music for my dog, who likes his dreidel when it sings songs. Jazz Pharmaceuticals had a pretty deep pullback down towards the 200-day moving average. The only reason I like it is I've been in this company for a long time. I've seen some pretty deep pullbacks, which have been good buying opportunities. You can see on the weekly lower left, upper right. It is above its long-term trend line. It has earnings per share growth in the 30% range and a PE of 12.9. They've done some weird things over the past year. They were acquired or they did a reverse merger with a smaller Irish company, relocated to Ireland, but also got a great tax rate by doing it. Eagle Materials is another stock like Trex tied to the housing boom. They make construction materials, cement, and I think you could see it's had a small pullback, which lasted all of about 3 days, and looks like it's probably getting ready to run again. You know, I'd probably set my buy above the close. My stop kind of where it opened on Friday. Got great earnings per share growth. I believe housing is going to take off from here, and I'll mention a couple ones that I bought. And if it does, this will continue to be a leader. And when you think about the pullback we've seen in the market, there are very few stocks that have looked this attractive. Patrick Industry, another building support company. This is you can see millwork, veneer, plywood, etc. You look at the earnings per share are kind of boring. The revenue is kind of boring. So if you look at junk off the bottom, this was a stock that in December of 11, a year ago, was $2, and now it's 18-ish. Wouldn't you like to have made that run? I have no idea why you would have found it back then, but God bless anybody that did, because what a great return they've had. Again, why do I like it? I like it because it's pulled back to the 50-day moving average. If I see a kahuna, if I see a very bullish candlestick coming in tomorrow, though I like the one we saw on Friday. In fact, it looks like it might be a bullish engulfing pattern. I might be optimistic about this. I don't like its earnings story, but I'm questioning whether those are real, considering where it's been. Staying in the same theme, lumber liquidators. Pulled back to the 50, had volume, a kahuna on Friday, great earnings, trades at a PE less than its earnings, has been a leader, I think will continue to be a leader. It looks like an impressive stock to be considering. A lot of nice stocks this week compared to last. Again, I love pullbacks. They don't get prettier than this one. Here's a class company, Biogen IDEC, one of the leaders in the biotech space, which has been a leader. We'll go to weekly quite some time. And this is going back at least for a couple years. And this pulled back to the 50 weekly or about the 200-day moving average. Why do I like this? Because I'm not going to let it get much below the 200 before I'm out of it. It would have been nice to pick this up during the day Friday, because I think it gave me the pattern I like to see on Thursday, and I would have bought it if it got above the high Thursday. It doesn't have great earnings per share growth. It never has for the longest of time. It's got a very interesting pipeline. They've done a number of nice acquisitions. They've got some great franchises, great stock. Look at the volume. Look at the pocket pivot. Look at the pullback. That is what I want to see. That's my favorite kind of pattern. Very nice looking. Maybe somebody can email me and tell me what the story is with Flagstar Bancorp. Wouldn't you love to buy a stock with basically $5 of earnings trading for $15? There has to be some fleas in this thing. I just don't know what they are. And the pattern, I apologize, my wife brought the dog in, even though she knew I was doing a webinar, and then she brought me a snack, and my dog wants to eat the snack. So he's not very accommodating. But you see a stock with beautiful fundamentals. There's got to be a story here that I don't get. Huge earnings per share growth in a nice move up, pulling back to the 17-day moving average. Multiple of 12, doesn't pay a dividend. Maybe it's got some TARP-related issues. Worth investigating, probably worth buying. I like the pattern. Every time it pulls back, it runs. Wouldn't you want to buy that stock with those earnings? I want to know more, but I'm very intrigued. Lululemon, or sometimes called Lululemon, I want to upset my wife, in a pretty deep pullback here, right at the 50-day moving average, sort of a Morningstar pattern with a kahuna on Friday. All the momentum indicators are down. Earnings per share growth remains in the stock. The multiples come down to 46. It used to be a lot higher. will probably run again into the holiday season, but I'd rather see it get a little more constructive and maybe see it get above that 50 in base. Pulte Group, home builder. I love this picture. Love it as much so much. I bought some on Friday after it opened up above its doji on Thursday. Clearly in a sharp pullback. We already looked at some of these. I think I looked at it with you, but I'm going to look at it right now. 8-10% pullbacks on this group, 20% on some. From the high to the low, pullback 20%. Doji followed by a big up day on Friday. I think this group is back. Here's Ryland Group, same exact pattern, pullback, run, great earnings per share group. Tenant Hospital Company. It's just interesting. What's the impact on Obamacare on hospitals? More volume, and this is a for-profit hospital company. There's a good chance that they're going to do very well. As I say, increased volume coming into their businesses. The other thing is, why wouldn't this company and others like it convert to a REIT and do what we saw with Penn Gaming? Trades at a multiple of 16.5, got some great earnings per share coming into the stock, although it's not had major revenue growth. Had a pocket pivot after a pullback to the 17-day moving average. Certainly looks to me like it's going to go. Cons is electronics and appliance. You got to put something in the home. We saw this with Lazy Boy, which continues to be strong. In an uptrend, a little bit of a pullback here with a Kahuna on Friday. Auto Nation, something to put in the garage. Again, this is kind of bordering on bottom fishing, but a pretty deep pullback. Pocket pivot on Friday. If it gets above this 8-day exponential moving average, I might consider buying it. Short-term target is the 50, which is only about a 7% move. That would be probably the thing I don't like about it, but nice volume came in on Friday as well. Louisiana Pacific Corp, another offshoot of the housing industry. You got to use wood to make houses, and they make lumber. And you could see they've had a beautiful up move. And every once in a while, a quality stock will give you a pullback and an opportunity, and I think you're getting one here. It had a gap up here, I think, on earnings, on which it couldn't hold. Got back almost to the 50-day moving average with a pocket pivot down, which is not a validated signal. Great earnings per share growth going forward, something I might be interested in. Heartland Payment Systems giving us a little bit of a rounded bottom with a dimple in it. Pocket pivot, Kahuna, and volume coming in on Friday. I'm not going to take the time to research it now. I'd want to find out why. It's going to have some resistance with the 50 to 200-day coming together at about 29.5, but not a bad-looking potential purchase. Here's been a leader. We've talked about it on several times, Owen Financial Corp. Things are getting a little confusing in this space as there seems to be a lot of jockeying to buy what were distressed and now starting to perform assets, and the companies that buy them, Owen's one of them, win when they get the assets. So here's clearly a very tight leader on the way up, kind of a sloppy pullback, several attempts to get to the 50, hit it with a doji on Thursday, gapped up on Friday on volume, great earnings per share growth. I think you got an opportunity to buy it at a discount of about 15% of where it was trading 10 days ago. Medivation is a company with a new prostate cancer drug, deep pullback. I mentioned this one earlier. Acquisition candidate plus on its own. It's a very attractive story. Nice place to buy. Pull back on the 200. Looks like it's going to hold. Give it a chance to go back up. Don't know this company from Adams Stewart Information Services. It was on my list last week and continues to perform. Property and casualty insurer. You can see very tight little boxes. Nice run up. Had an interesting shooting star day here. I like it because its earnings per share growth. Give me a little pullback to the 8-day, probably not deep enough, but something I might take a look at. And we're getting near the end, and I'm getting tired. I bought this stock on Friday, just like I bought Pulte Homes and another home builder. You could see a pullback to the 50, a doji. Traded up on Friday with volume. Great earnings per share growth. U.S. Gypsum, whatever gypsum means, makes concrete, gypsum, and plaster products, also housing related. Lennar, again, another builder with a similar pattern, moving up again. Chico's is one of the rare retailers besides the lumber liquidators that made my list today. I'm not sure it's really a nice looking pattern or not. It's sort of in nowhere land, but I like the candlestick on Friday. It has some volume. It's got some earnings per share, trades at a multiple less than that. I probably would put this on my bottom fishing. Let's see what it does, because I look at it now, I'm not too excited by it. Family Dollar Store is another bottom fish. It looks like it might be getting ready to run with a kahuna. Most things are green. It'd be interesting to see where this one goes from here. I'd probably be watching it for a signal to buy. Illumina is a biotech company that makes the ingredients that a lot of biotechs use. Had a pretty deep pullback running up its 50-day moving average. Had a number of pocket pivots in here. Everything has turned green. Kahuna's on Friday, earnings per share growth of 20%, trades at a multiple of 35. Again, not the best of the stocks as we're getting down my list. I'm starting to get tired, so I'm going to go rapid fire. Well, you know what? We met my time. Let me see if there's anything else that I wanted to point out. Let's look at Sabra and Safeway and Nation Star and then say goodnight. Don't know much about REITs. Occasionally I buy them for the dividend yield. I don't really know enough to teach about them except nice lower left to upper right pattern, pull back to the 50, had a doji, got back above the 50. A kahuna on Friday, great volume, great earnings per share growth, and most importantly, trades a dividend of 6.3%. That gets me thinking. Don't know enough how to grade these. I like the chart. I like the dividend. Atlas, I already mentioned to you, as one of these pipe companies with a nice dividend. This one has dividend 3.3%, but several in the sector. Made it to my big watch list. Safeway is a bottom fish, but kind of looks like it's had a nice base here going back for 2.5 months. Had a pocket pivot. Kahuna coming in on Friday, everything turned green. It's got some earnings per share growth, modest earnings per share growth. If I look at its dividend yield of 4.2%, I thought that was attractive. And then lastly, Nation Star Mortgage, another in the offshoots of the housing industry. A deep pullback, crossed by the 8-day exponential moving average, kind of a J-hook. Near-term target is the 32. It's got earnings per share. Had volume come into the stock. This might be one that I play as a speculative stock. On that note, I want to thank everybody for joining me. I'm sorry it went a little bit long. Tried to look at a lot of stocks and give you my thoughts. As I said, we all have our own styles. I have mine. It works for me. It doesn't necessarily have to work for you. Appreciate you being here. Have a great holiday to all my friends and those I don't know who participate on these programs. And please join us again. If you like what I do, send me a note and tell your friends. And on that note, I say good night.